So this is section one where we will be discussing about the market. So we'll start with Nifty, right? So first one is an Nifty, and let's cover what we discussed last week. So basically, let me count the candle first. So this is Friday, not Friday, sorry, Thursday. So Friday was a holiday, and then Thursday, Wednesday, Tuesday, and then Monday, right? So it was a short week, 4 week thing. So again, last week we discussed that the candle is being squeezed between the 50 DMA and 21 EMA, right? So that's a narrow zone that has been created in this while, and this is a good sign. I mean, if there happens to be a V-shaped recovery, like what we have seen in case of small cap stocks and even the ETFs pertaining to the same, and likely the mid cap scenario, that's kind of bad, and any reversal that happens usually turns out to be bad. Okay. Because such rallies or such lockout rallies usually happens on FOMO, okay, and some stories actually. So that is the actual case. But in case of Nifty, as we see, Nifty is giving a nice consolidation. So it reversed like in a V-shaped recovery, right? This was a V-shaped kind of recovery, and then it is forming a nice handle. Now, point number one was since gap was filled last week only, if we can see that this high, right, 23,907.4. Now, the low which was made was 23,814, somewhere close to that. So, gap was convincingly filled, right? So, the only gap that is remaining right now is this one, correct? This is a large gap, actually. So, it depends. I mean, if this is a start of a very fresh rally, which is a new bull rally, okay, then the probability of such gaps being filled is kind of a bit low. I mean, if that is filled, it would be a partial gap filling, okay. But if we look into the scenario right now, it could be anything. I mean, we can attach probability for sure, but again, Nifty is always trying to catch up with the 21 EMA, as you can see, like 21 EMA is 23,979, right? So that is the 21 EMA. And Nifty closed around 23,997.6, a bit short of 24,000. So people can argue that, okay, 24,000 being a nice round figure, right? So 24,000 would be a natural resistance that the Nifty should be facing, and that is actually true. I mean, for the week, the Nifty closed below 24,000, right? A bit short of 24,000, and that's a bad sign actually. Psychologically, we can say, okay. But again, it depends as in where the market goes further, okay, whether down or up. We would not predict as of now. We'll wait for the breakdown if it happens on the downside. So if this low, I'll mark this one. If this low of this candle, which is 23,813, okay, if this low is broken on the downside, then we can expect, okay, further low might be created on the right hand side. That is one. If this low is being held, right, and if it tries to break above 24,000 and close above this 50 DMA of 24,138, right, that would be a very good scenario. So this whole week, right, these 5 days, we'll have to wait and see if Nifty breaks below 23,813 or it closes over 50 DMA on the upside. Okay, either ways, whatever happens, then we'll get an indication uh, what is the trend it would be, right? So the bias is actually positive. So basically, whatever downside that comes, right, that would be an add-on dips opportunity. So the this is the start of an uptrend. That is point number one. Number two, any downside that comes, that would be an add-on dips opportunity, creating new positions and entering new names, which might be some great earning busters or great earnings triggers that might come in future in those names. Okay. Now, talking about the market as a whole, again, this is kind of a consolidation thing that is happening and digestion of the move that has happened on the left hand side. So that's nice that Nifty is hanging around 21 EMA. Nonetheless, to say that on Thursday, right, it was a bad day actually. If guys would remember, so Nifty was down more than 300, 350 points intraday, right? And thereafter, during the whole day, it kind of recovered mostly. Okay, all the losses were kind of recovered, and it closed on the upside above 21 EMA, and then a nice closing happened, right? Ultimately, so it's a very narrow zone that is there, and then we'll have to see how things pan out. For now, understand that 23,981 would be a strong support right here, and we'll have to see if it is sustained or not. And on the upside, obviously, we have to catch a lot of things like we have to catch up with 50 DMA and then 200 DMA, which would be the ultimate resistance, right? The real test for Nifty would be close to 25,100. Okay, that's the biggest resistance zone around which the Nifty might face some troubles. On the contrary, we can say that there is a gap. I think this is the only gap that is remaining. So I'll just mark it right now. So gap is actually filled most of the times in case if it's index or a very high liquid stock. Okay, that happens most of the times, and we can see that there is a nice gap here which needs to be filled, right? So this is a coincidence zone with 200 DMA and the gap, right? So the probability of the gap being filled is very high. Okay, that is where I can attach the probability. So let's say, okay, say there would be a 70% probability that the Nifty might consolidate on the right hand side for some time, but ultimately it'll try to go up and hit 200 DMA as well as fill the gap at the same time. Okay, we'll see if that happens or not. But this gap theory that would stand, right? I'll just mark it. Perfect, done. So this is done, and Nifty seems okay-ish. Okay, it is a very constructive move, and this is a very good one, I would say. But let's look at mid cap. So mid cap is also consolidating, but stronger. It's much stronger than Nifty. What we see there. So mid cap is above 50 DMA, 21 EMA, 200 EMA, everything, right? So it's a very nice construction that is happening. The trend is there. Obviously, it has begun its trend like 2, 3 weeks prior, right? The trend is there. It's just that the constellation is being happening right now, and again, it's a good scenario overall. Okay. Now, lastly, we have small cap. So again, as we discussed last week, it's a very crucial zone for small cap. So basically, if you see right here, so it was a very fierce V-shaped reversal recovery that we have seen exactly from the bottom. Okay. So again, reiterating the same thing that we discuss every week, like long-term double bottom is in place. After double bottom, there has been 3 weeks of continuous up move, 1 week of consolidation, and again, last week I'll consider that as a consolidation and not a move on the upside. So first breakdown happened last week only. Try to that also one time happened, but again, this was a convincing one. But again, recovered above 200 DMA. So most of the stocks that you would see right now in the market, either they would be consolidating around 200 DMA or somewhere close to it, like a tad above that or below that, something, right? So if you see any stock that is consolidating around 200 DMA, a bit 5% below or a bit 5% above 200 DMA, that's completely fine, not a big deal. Okay, that's okay because the whole market for the small cap or the breadth below the market seems the same, right? Basically, we see this ETF, right? The support would be close to 42.7 and then 50 DMA, right? If a breakdown happens, then obviously 21 EMA and 50 DMA would give us support, right? And if it sustains, right, it would sustain on the right hand side and form a base, right? A base formation is very important, and I think the situation is very ripe after this fierce V-shaped reversal recovery. Again, same situation exists in case of small cap segment also. That everywhere we would have an add-on dips opportunity. Same case for small caps also. So, but the upside opportunity in case of small caps would be much higher than that of large cap ETF or something. Okay. So I'll conclude this thing. This is kind of V-shaped reversal recovery, and for last 1.5 week, we are into a consolidation zone across the market, whether it is Nifty, small cap, mid cap, or whatever. It's a nice consolidation and constructive consolidation that is going on right now, and situation is very nice. As in, earnings is also going on right now, and if consolidation is also going on, then any great earnings breakout would be an opportunity because in last 2 years, right, after September 24, as I usually discuss about, so basically small caps and mid caps have kind of given some bad returns. Okay, they have been in a downfall for quite a long time, and right now, if there happens to be earnings breakout or some trigger or something happens, right? So that would be a very good scenario. One update is that there's a segment in the market where themes are being played out. I mean, if you guys remember that, I think 3 or 4 weeks prior, somewhere around end of March or something, mid 20 or 25, 25th March or something, we discussed about those sectors or segments where the stock seems to be strong and where theme seems to be strong. Okay, so out of that, power segment, transmission, distribution, and solar segment, and all of these guys, okay, defense, aerospace, precision engineering, and stuff. These guys have been very, very strong, and they have given a nice fierce rally in this in these last 3 weeks. Okay, now these are not backed by any data as such, like earnings breakout or some great orders or something. It's not like that. It's just that. Uh, a few people or say the market is chasing stories and stuff. Okay, that's fine. I mean, thing is like it's just a warning to say not to get enough FOMO and then throw the towel and then just think, yeah, okay, everything done and dusted. Will rush after the extended games. Okay, so that is one update, and this was section one, and we'll move forward to section two.